since it's an international conference, I thought I would start by showing a bit where our life insurance industry is. So we, as Romanians, we all know that it's underdeveloped, but I think for our foreign counterparties, perhaps it's a very good idea to show a bit how underdeveloped it is. And here, I have shown here 3 indicators which show actually the degree of underdevelopment that way. First of all, the life insurance share in the total market is about 20% compared to something like 60% at the European level. Then if you look at the density, that's the average premium per capita in euros, this is the lowest density, 16 euros per capita, which, compared to a European average of about 1,000 euros, is dwarfed even by our peers in the region, such as Poland or Slovakia. I think the most depressing picture here is perhaps the life insurance penetration in GDP. And here we see 0.3% premium to GDP ratio, which I don't even dare to compare to markets such as the Netherlands or the UK with 4% or 8.5% penetration into GDP. But even to markets of our peers, I saw guests from Poland, it's 2 and a bit % premiums into GDP. So there's a factor of 6, 7 between our market and our peers in Poland, Czech, and Hungary. So the question is here now, of course, why? Why is it so underdeveloped? And of course, the usual suspect and the first answer that comes to mind when you ask this question is the economy. And that's obvious, that's pretty sure. When you read any research reports from Goldman Sachs or JP Morgan, and you name it, you see that insurance is a GDP-led sector. So it's obviously very much dependent on the economy. Yeah, and that sounds, it makes sense. If you think about it, the Romanian consumer, first they need to buy food, then they need to buy energy, then perhaps they need to buy fuel, and only afterwards they can look to this discretionary product such as life insurance. But I think it's a bit primitive to attribute all of this only to economic development. And a very, a balanced approach would be to look at other factors as well, because I don't believe it has to do only with economic development. And one other factor that we could look at is the cultural beliefs, or so to say, the cultural imprints. And here we have a study performed by a company in our association in 2013, where it is clearly shown by a lot of qualitative research that Romanians have this inherent expectation that the state should take care of their needs, as they grow older. Moreover, the approach towards family of Romanians is one catered towards taking care of their children so that children can take care of themselves when they are old and decrepit. So this, obviously, this cultural insights, they don't help. So adding to this ailing economy, it's also a truly non-insurance friendly culture. Now, besides the economy and culture, we also see that the gap in confidence to financial industry is very high. So this is a study made by Gallup in which consumers from various countries had to answer the question whether they trusted or not the financial industry. And we see that Romania stacks very low. It's actually a bit higher than Greece and Ireland, but for obvious reasons. In Greece and Ireland, I think we all know what happened with the banks and financial institutions. Therefore, it's kind of normal. Nevertheless, barring these 2 countries, Romania is really among the lowest of the low. So there's a lot of work to do here with respect of trust. And why is that important? Because so far, I thought we had an underdeveloped market because of economics, but we cannot change that very much. Then we have a cultural imprint, which is a change that's going to happen among generations, so it's not something that can happen from one month to another. And then we had a problem of trust and confidence. And I think at this problem of trust and confidence we can work right now. Because one thing the Romanian consumer does have in common with the global consumer, and that's not something that you cannot read, because it is something that I realize now you cannot read. Nevertheless, this is another study made by Epiphany in 2010, where the Romanian and the global consumer was asked, or from all countries, were asked to name the ideal features of a life insurance company. And what you don't see there is that the first two items, the first two elements, are transparency and clarity. Now, to me, transparency and clarity are not very different from one another, so it really means the same thing. But that shows that the Romanian consumer desires the same thing as the global consumer, a transparent and a clear insurance company to deal with. So the question is then, what was done in Romania given these insights? And if we look at it, we see that quite a bit was done already. And quite a bit was also done at the initiative of the insurers as well. So we have this great case of self-regulation in 2010 when the Insurance Association and the insurers have suggested some changes to legislation, to transparency legislation, which were endorsed by the regulator at the time. So in 2010, a piece of legislation was passed where all insurance companies and all intermediaries needed to do three large things. One, all sales need to be based on a needs-based analysis, and that needs to be documented. And that's a lot of what is prescribed now also in IMD and PRIPS. Second, if a unit-linked policy is sold, then the intermediary and the insurance company needs to hand over a prospectus of the investment fund to the prospective clients. And this prospectus, it's actually a fact sheet. It's called a prospectus, but it's really the equivalent of a fact sheet, more like the product cards, if you want, from Poland. And last but not the least, they also need to hand over to the prospective customer what's called an illustration, a projection of the account value, including, by the way, surrender value, under three scenarios, of which one needs to be with 0% return. So I would say that on our quest to implement PRIPS when this comes, and as we know, it's a European regulation, so it needs to be implemented as it is, we are not starting from zero. We are somewhat midway. I can't really tell where, nobody can. But here, at least we have tried to look into the gaps between the current legislation and the upcoming PRIPS, the KIDs. And we broke it down by elements, and again, you can't read much because of the light. But what you can see is these color codes. And red means needs to be implemented. Yellow means partial closure is needed. And green means that it's already in place. So without even going through all the elements here, I think we see that a few things are already in place, important things are in place. And quite a few are partially in place already. So I truly can say that we start not from ground zero, but at least we start from some element of development which is somewhere halfway through. Now, the question is whether this is going to solve the problem of trust, because we started talking about trust and somehow we got to transparency. So the logical question is, okay, if we work on transparency, is that going to solve or not the problem of trust? And I don't know. Because besides transparency, I think insurers and we need to work on many other elements in order to increase trust. But I think what I do know is, or at least what I believe, is that it will help a lot with customer satisfaction and also with persistency. But with customer satisfaction for sure. So we have, again, a company member of our association which has run a study in the last 6 months between August 2013 and February 2014 in which they interviewed 1,500 new life insurance clients, and the interview's main goal was to analyze the client's level of satisfaction and somehow correlate that with various elements. And the conclusion was that there was a very high correlation between the clarity of information and the overall satisfaction score. And there was a correlation coefficient of 0.75. You know, we are all, or most of us around here are insurers. So we know statistics, and this value of 0.75 for correlation coefficient is very high. So it shows that clarity and transparency does drive satisfaction. Furthermore, they ran a multiple regression between the satisfaction score and a few other elements such as clarity, simplicity of the process, agent's attitude, and the quality of advice. And the relevance of that, the so-called R squared, is about 50%, which is also quite high. And clarity was the single largest contributor to this multiple regression. Therefore, I think we can safely say that transparency does drive satisfaction. So the clients want it, you know, the clients deserve it, so that is definitely good enough reason to do it. And if we needed any more reason, I think persistency of our portfolios is also a very good one, because there's a very obvious different correlation between satisfaction and persistency. A satisfied person is most likely going to stay with us for longer. And actually, if you look at measures such as NPS, they are very well correlated to persistency. People with scores of 1 to 5, so in the bottom half of the satisfaction survey, they are 2.3 times more likely to lapse than people in the, with scores in the top half. And if you look at grades of 9 and 10, there is even a factor of 4. So again, this is just an additional reason, but the main reason is obviously that the clients want and they deserve this transparency. And it's shown that there is a very high correlation between transparency and satisfaction. So that's why our association focuses on transparency and professionalism. We believe that this is the way we are going to gain customers' trust. We are a very strong advocate of client-centric behavior and customer experience. And likewise, we are a very strong advocate on education on consumers, so that we change this cultural belief of the responsibility of the state to the responsibility of the individual. And last but not the least, of course, we welcome European legislation, and we believe it should be implemented in Romania according to its spirit and also adapted to the local reality. Thank you.